He might have a bell. That's Ted Seifried, Zaner Ag Hedge. Ted, thanks for being on. Somebody sent me a cowbell that's actually painted like a cow. That's what I got. I have it right there. That's exactly what I did. Yeah, so that's what I was going to bring. I don't want to, well, we'll see. Anyway, short cover, exports weren't horrible, but I don't know. Just kind of covering some stuff, getting ready for tomorrow. I got no excuses. What do you got?
Yeah, we got a report tomorrow. I think the concern for this report is, okay, what happens if the USDA lowers South or Brazilian soybean production down to the numbers that we're looking for, 152 or maybe even a 151? What does that translate to? Because we know that Brazil every year runs themselves into a zero carryover, right? So if you cut their production, some of the demand has to be cut from them as well, exports in particular.
Right.
So on a global balance sheet, if the USDA cuts 4 or 5 million metric tons of Brazilian soybean production, one of two things happens. Either demand displacement, meaning that 4 or 5 million metric tons has to be accounted for somewhere else, and that would likely be our exports, and we could get a bigger export number tomorrow and a tighter domestic balance sheet, which the trade's not really expecting. That would be a slightly bullish report. Or there's what's called demand destruction, which means that 4 million, 5 million metric tons that come off of Brazilian production also comes off demand somewhere else in the world, i.e. very likely China. And that would be pretty bearish for the market because that really negates the whole bull cry of this bad Brazilian crop is going to bring in a lot more exports. So when you do see an export number of 600,000 plus, which again is not a fantastic number, but it's a whole lot better than the number we've been seeing, that kind of reignites the whole thought of, hey, maybe we will get some more exports here. Maybe we will have end up with a carryover below a 300 million bushel carryover in soybeans. So that's good news. The other thing is, corn, I think, just got very oversold, has reason to try to go higher. We're trading above the 20-day moving average for the first time since early December, Scott. So this has been a nice little correction. While it doesn't feel like it's been that substantial, at this point, we're now out 30 cents off the lows, which is really nice to see. Whether it keeps going or not, I think really kind of depends on somewhat the WASDE report, but really the longer-term Brazilian forecast for that second season corn crop. There are some concerns in there for the end of this month into next month. If that stays that way as we get closer, that could really kind of build some reason for these funds to cover shorts. So there are some things out there that could kind of perpetuate this a little further. But those are big ifs, right? That they're not givens. I don't think you can take that for granted. I think at this point, after bouncing 30 cents off the low, you have to take it for what it's worth. Maybe get a little of that old crop sold that a lot of us seem to be sitting on a whole big pile of, apparently.
Yeah. Or at least buy puts or something. All right, I agree with it. That's great stuff. That was really good. Stay right there, though. We need to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge. He's in Chicago. We'll be right back after this. Ted, doesn't look like there's a lot going on out there. You got anything going on?
Yeah, no, not really. But, I think that means different things for the cattle complex and the hogs. The hogs not doing much of anything and kind of consolidating the move lower that we've had the last few days, I think is suggesting that we're trying to hold support here and maybe getting ready to bounce back. I think that's good. On the other hand, you look at the cattle complex, right? These are markets that haven't had a correction since we put our lows in on December 6th, at least not a major one. But we do have charts that look like they're trying to roll over to the downside. And I don't think this is a big change in the overall trend, but I am more and more getting convinced that we are due for a bit of a deeper correction.
Right.
Pretty healthy for the market. We kind of ran away from where cutouts have been and where cash has been trading. I think a break in the market to kind of spruce up some of the Packers hedges might increase their margin and actually allow for some higher cash trade to be paid down the line. So I don't know. I think it'd be healthy for a market for a correction. Right. And again, it looks like it's getting closer to something like that.
Right. Good stuff. Great content as usual. Thank you very much, Ted Seifried, Zaner Ag Hedge. Love having you back. He's coming to us from Chicago. We're down here in Nashville and ready to go.